In the knowledge economy, it's the knowledge worker, it's the talent that is the critical resource that every investor and every entrepreneur is seeking. So then the question is, where is that natural resource being generated? Well, it's actually being generated through the universities.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Whole Milk himself, Eric Hornung.
So Jay, in our household, we very rarely have traditional milk of any kind, animal milk, if you will. We're an almond milk household, and what that means is I don't traditionally partake in the milk drinking. Not that there's anything wrong with almond milk. It's just I don't pour a glass of almond milk, you know?
It's just like an additive to your coffee. Is that what I'm getting at?
I don't even put almond milk in my coffee. Put it in the eggs if I'm going to whip up the eggs because you need a little milk, or if a recipe calls for milk, then you use almond milk, but it's not a standalone milk for me. Well, one of the benefits of this quarantine is that Whole Foods mixed up our milk order and brought us a singular carton of whole milk. And man, have I had a week.
Were you raised on milk? I was full on raised on milk.
I was a gallon of 2% milk probably every 3 days when I was in high school. Maybe even more when I was like in my lacrosse bulking phase.
I don't think I drank water until I got to college. Everything was milk.
Really? You didn't have water?
Not really. We had a well. Our tap water was well water. I didn't love it. I had it at sports, but like at home, if I was drinking something, it was milk.
I think I drank a lot of water and a lot of milk. I think I was just an over-liquidated child.
These substitutions that grocery stores are making during quarantine on these deliveries, we requested pasta sauce and were substituted without asking diced tomatoes.
Well, you can make pasta sauce out of diced tomatoes, so...
That's quite a judgment call for the Instacart courier to make.
So you use Instacart?
Yeah, I don't remember which one that was. I don't remember if that was Instacart or if that was like an Amazon Fresh. We're doing it all. It wasn't GoPuff. I can tell you it was not GoPuff.
So the way I understand it, and Colleen handles all of this, but the way I understand it is they kind of text you when they're in the store and say, does this work for you? Usually.
Yeah, usually we've gotten that, but in this circumstance, we were given diced tomatoes without our consent.
So did you make pasta sauce with the diced tomatoes?
No.
Well, that's like the opposite of what you're supposed to say in an improv situation, Jay.
You're right. I should have said yes and. Well, speaking of milk, which comes from America's dairy farms, often.
Oh man, this is a stretch.
Today we are speaking with Patrick Mckenna, the founder of One America Works. One America Works connects fast-growing companies with future-focused cities to help create new economic opportunities. By bringing investment and innovation to these communities, more people and more places will have access to the careers of the future and help contribute to the shared success of our economy. Eric, One America Works is a really interesting model. Patrick lives in Austin, Texas. I met him on the Comeback Cities bus tour, knowing that he spends a lot of time in Silicon Valley. One America Works is helping to solve one of the problems we saw when Amazon was opening their HQ2 nationally. And all these cities were competing with each other and kind of creating a race to the bottom in terms of what they're offering Amazon.
Yeah, it's kindly referred to as the mullet strategy, where you put a second headquarters or a back office in a lower cost city and you keep your front office in San Francisco or New York or whatever it is. I guess some companies just move completely, but I think he's helping find which cities companies best fit with to accelerate their growth, but also save them some money and be more efficient.
That's right. I met with the One America Works team a couple months ago in Columbus, Ohio. They were looking at Columbus as one of the cities they want to better understand so that they can pair high growth companies to Columbus as a place for a second headquarters. I'm really interested in the strategy, so I'm interested to hear from Patrick here in this interview what that looks like long term, how it all works, and why he's interested in this venture in the first place.
If you guys have any thoughts on this interview or diversified workplaces, you can tweet us at UpsideFM, or if you have something a little longer, you can send us an email at hello@upside.fm. And we'll get to the interview right after this.
Eric, what do SaaS companies, autonomous vehicle companies, cybersecurity companies, blockchain companies, and consumer marketplaces all have in common?
They're all companies.
They're all companies, and they're all companies who have hired our friends at Integrity Power Search to help them fill their talent needs. Integrity Power Search is the #1 full-stack, high-growth startup recruiting firm between the coasts. They partner with venture capitalists, private equity groups, and CEOs to build amazing teams for the world's most disrupting companies. That may be SaaS, autonomous vehicles, blockchain, consumer marketplaces, insurtech, robotic process automation. Eric, they can do it all.
They can do it all, and we've seen them do it all. They are impressive.
Over 600 searches since 2012, more than 200 happening just this year in 2019. Their clients have collectively raised over $2.5 billion in venture funding. If you want to hear how Integrity Power Search can help your team fill your talent needs, go to upside.fm/integrity and get started.
Integrity Power Search, who you going to call? That's their slogan, right?
I don't think it is, but maybe it is now.
All right. You're welcome for that one, Caleb.
This episode is sponsored by RIMS. RIMS is a global organization dedicated to the profession of risk management. For nearly 60 years, RIMS has delivered the latest strategies and resources that allow risk professionals to grow, innovate, and succeed in any business. RIMS works with industry leaders to produce content and online training that business professionals turn to. Topics include business continuity, cyber risk, risk management techniques, the fundamentals of insurance, and more. There is also a private members-only site where people can discuss sensitive issues and get honest answers. In that members-only site, members have been leaning on each other as we all navigate the global pandemic. If you're concerned about the safety of your employees and the sustainability of your organization, you need the resources and connections that RIMS provides. Learn more at go.rims.org/upside. That's go.rims.org/upside. And you can save 25% off a year-long membership. Patrick, welcome to the show. Welcome back to the show, actually.
Yeah, glad to be back. Glad to be with you guys.
Patrick, on Upside, we like to start with a background of the guest. So can you give us a brief history of Patrick?
Sure, happy to. Well, I'll start with the relevant points. I've primarily been an entrepreneur. I've started 4 companies, co-founded 4 companies, 2 based in Silicon Valley and 2 outside of Silicon Valley. 3 of the 4 have been distributed workforce-based companies, which will be relevant for our conversation today. In Silicon Valley, I started as a co-founder of a company called LiveOps, which was work-at-home customer service. We scaled that up to 20,000 work-at-home customer service reps in 32 different states. That was a really fun ride from 2003 to 2008. And more recently, I started a fintech company, co-founded it in Baltimore. It's called Facet Wealth. And this is certified financial planners working from home, relevant to the distributed workforce, but focused on bringing financial planning to the mass affluent. Also, as an investor, I've invested in 47 companies through High Ridge Ventures, which is kind of more of a home office and kind of early stage kind of seed angel fund. And 30 of those companies are based outside of Silicon Valley. Again, there's this thesis and this theme of kind of bringing kind of our capital and knowledge networks that many of us have acquired in Silicon Valley and identifying opportunities and backing founders or starting companies outside of Silicon Valley, kind of accessing that talent and those resources, which I'm sure we'll get to. And then One America Works is a nonprofit that I co-founded a couple of years ago and is focused on helping different geographies work together. Hopefully we'll get into that as well.
When did that theme first emerge in your personal life?
So I grew up in a small town in Northern California. It's like 5,000 person town, and went to college at USC, so a big city. And so I kind of had that small town outside of kind of the mainstream, and then got this right into the deep end of Los Angeles, going to school down there. And then I went off and was in the Army and was a technology officer. And then after the Army, I ended up in Wall Street working at Morgan Stanley in investment banking. I was an M&A banker, for the end of the 90s. Kind of got that full experience of working at a very high level in finance, but always kind of remembered where I was from. And so when I joined an early stage company and then founded my own company, we were working with people who were based all over the country. We were in 32 different states. And what I saw was just amazing amount of talent, just really high quality people who weren't in Silicon Valley, weren't in New York, weren't in Los Angeles, but had a lot to offer. And after I sold my first company, LiveOps, I really developed this very direct theme to say, you know what? There's so many talented people around this country that don't have the same access that I had, having left my small town and gone to school in a big city, and then got a job on Wall Street, and then was in a Silicon Valley or in a Sandhill venture capital backed company. I said, how do I match my experience with that great talent? And that kind of led me to figuring out ways to access people all across the country to build businesses and back them in where they are.
Obviously, you've continued to live in the Valley area while you do these ventures that have roots all over the country. How have you thought through where you base yourself, given that if 30 of 47 of your portfolio companies are based outside of the Valley, why still stay in the Valley as your own headquarters?
Well, I suppose this will be our first surprise on the interview, is that I actually live in Austin, Texas.
Okay.
And it's really the answer to your question is the reason I live here. Is when I started this journey of looking for opportunity, backing companies, looking for entrepreneurs, I quickly realized that I needed to be closer to the market I was interested in. And if you're going to develop a network that's going to lead you to the entrepreneurs that you want to back or the ideas that you want to start, then you need to be closer to those markets. And so it started off as basically a road warrior, going and traveling and going and spending time in Baltimore, spending time in Portland, Maine, spending time in Columbus. And what I quickly realized is, showing up every once in a while doesn't build the networks that are required to both get high quality deal flow as well as to really solidify the ideas that can turn into businesses. And so I still keep my place in San Francisco because you really do need that foot. And there is an amazing knowledge network. There's an incredible amount of innovation. And so my whole thesis isn't one or the other, it's how they work together. That's really the key to success. And so I've made the decision that I want to get closer to the markets that I want to be focused on. And so from Austin, I can get to these places very easily. I also more immerse myself in this different way of working, different way of thinking that is kind of creates a unique view of the world rather than being somebody sitting on the outside in Silicon Valley and looking at how to access this talent pool that's across the country.
How common or uncommon was that perspective, in the early 2000s when you're working on LiveOps? Were there a lot of investors and operators like you in the Valley who were looking outside of it at that time?
No, I think we were all moving to Silicon Valley at that point. So I moved to San Francisco in January 2000. And I think most of the people that I was working with had literally moved to the Valley around that time. It wasn't until after the, say, maybe 2003, 2005 timeframe did people start looking to kind of rebound outside. So at LiveOps, when we got about 500 people in Palo Alto, it became very clear that it was probably too expensive to continue to scale up our operation there. And we then opened an office in Phoenix. And it was this has really turned me on to the potential for opening offices and accessing new talent, not just with distributed work, but in offices. We opened the office in Phoenix, and it wasn't that methodical of a process. It was like, where's a place that's kind of close by that has a good school? And we decided to do it. And then we offered that option up to current employees to say, hey, if you want to move to Phoenix, then you could just take your job, take your salary, everything. I was surprised. It's like 15 people, which said, great, I'll move. And I asked them about it. A few people that went down there, and they're like, look, I live in a 2-bedroom townhouse in San Jose, and I can move to Phoenix, take this great job. I love working here. I have a great salary, great career path, but I can go down there, buy a house, send my kids to good schools, have a pool, things like that. And so as we started scaling up the Phoenix office, we went from, 0 to 200 pretty quickly. And we found that there's really unique talent in that case in Phoenix that we actually didn't have access to in Silicon Valley around operations and back office and things like that. So it made our business more successful by having that office. And that then informed the way I think about talent, entrepreneurism, the way you think from the beginning, how to build your business, that you're going to go and put your offices either work at home or in the places where that talent is that you want to get access to.
You mentioned before that it's more about how the Valley and outside of the Valley work together than it is one or the other. What are some examples of how the Valley and the non-Valley, as I'll call it, how do they work together? Or how should they work together?
Okay, so let's do two different answers here. One from the entrepreneurial answer, right? So there are a lot of problems that we don't see if your worldview is informed only by the Silicon Valley map, right? There's a lot of problems that nobody else sees, which are incredibly important problems to solve and great innovation. But there's another set of problems that are outside of Silicon Valley that if those problems were highlighted, then we could bring capital, innovation, talent to those problems. This could be like I have a company up in Milwaukee that's doing fuel distribution using a technology-enabled service to distribute fuel in a very efficient way. People in Silicon Valley may or may not see that problem and see the solution the same way. That's a unique perspective. Still tapping into capital and technology to solve that problem. Or say my company in Baltimore, we're looking at the problem of people with 100,000 to 1 million of assets and how do they get affordable, high quality financial planning. And that's a problem that may not get seen the same way in the Valley. Honestly, a lot of the solutions in Silicon Valley are very high tech, full robo, full automation. Say if you're looking at that problem for a place that is informed by Vanguard and T. Rowe Price and Legg Mason, you might see that and say, you know what, the human aspect is a little more valuable than, say, just the full automated. And so in that case, we said, well, how do we apply AI, machine learning, things that are being developed in Silicon Valley that are incredibly powerful, and then add the human element to it? And so from an entrepreneur's perspective, I think there's a ton of innovation that is being developed in Silicon Valley, but then can be leveraged to new solutions with new problems. On the workforce side, if you're scaling a company in Silicon Valley and you are building out your engineering team, your senior management team, and now you're looking to really grow and grow fast, there's a lot of competition for that talent. There's a lot of skill sets in Silicon Valley, but not every skill set you might need. And your alternative is then to go out to, say, Pittsburgh and start recruiting from CMU and drag those people back, or go up to Madison and recruit from University of Madison or University of Wisconsin-Madison and drag all those people back. But it turns out that the talent you need is already out there. So you can get access to a deeper pool of talent that has the skills that you're looking for and do it in place where they already are. It's a very specific example of, say, like Lending Home, which is a really cool Silicon Valley company that's doing really amazing stuff with home lending. Their first 200 people in Silicon Valley, their next 100 people plus are in Pittsburgh. And the people in Pittsburgh have more experience in doing, loan underwriting, back office operations, things that those skills aren't exactly in Silicon Valley. They're actually better there. And so looking for it's not a second level thing. It's a different talent that you need to scale your business that can be found in other places.
We're going to get to how that has evolved into the model with One America Works here in a second. But one last question on what you've learned with your background as an investor. If I'm an investor, one of your peers in Silicon Valley, or just getting into the game, and I'm saying, I think that there's some momentum in companies that are not based in the Valley. How do I get started? How do I start deploying capital and find good bets across such a wide geographic region? What type of advice would you give them?
The truth is you need to build your same type of network in the places that you want to invest in that you would need in Silicon Valley. There's no shortcut to just showing up to a pitch competition at some university and then just picking the winner and investing in it. That's not going to work in Silicon Valley. That's not going to work in Columbus. And so the way to do this is to actually make a kind of a longer term commitment where you're building network, adding value, identifying local success, super angels, local entrepreneurs, helping, mentoring, advising, do the pitch competition, but as an advisor where you can help those companies. And in becoming a known entity in those places, then you will start to see the pattern of deal flow. And the thing that I would really emphasize with the investor who's looking at these kind of like regional investing is to say, what types of companies should be built where? Silicon Valley has super deep, you can build almost any company in Silicon Valley. It's deep in almost every skill type, but other places have specialties. take Baltimore, for example. I got very involved in the Hopkins computer lab, they have a thing called Fast Forward, where my partner, Anders Jones, and I, who is with me in Facet, the CEO of Facet, we're spending a lot of time with local companies that we're spinning up out of the Hopkins kind of computer engineering program at Fast Forward. And you become a known entity. You're helping, you're meeting other super angels. And then eventually you find the talent that you're looking for. And you say, you know what? This idea matches the talent that's available in this place with uniquely, right? So I think it's really important to understand the talent that you're going to be accessing as you grow that company around the problem. So if you have a great entrepreneur who's got this great idea and he's trying to build it in a place that doesn't have the talent to support it, you may actually have some questions about it and say, great idea. Why are you doing it in Cincinnati? I mean, isn't that talent actually in Cleveland? Like if they're doing like a med tech thing versus doing something that's a little more retail. So you do actually need to have some discerning understanding of, here's the question I ask. Here's 3 questions I ask when I'm investing in anywhere, but really in the regional things. It's like, why this? Why is this a problem that you want to solve? Why you? What do you uniquely bring to solving this? And why here? The third question is not a question that you typically have to ask in Silicon Valley because it's kind of understood. But if somebody's in Cleveland and they've got an idea that this is what it is and this is why I should do it, and then on the why here, they say, oh, it's because I kind of know people, I've lived here before. Well, that answer. The right answer is Case Western has an incredible program that's developing an innovation here. There's 3 companies that are senior here. They're going to be my buyers. I've got an angel who's like, there needs to be a strong why here. And if your founder can't give you a strong why here, then you should probably question it and maybe say, hey, go somewhere else and do it. But I think that maybe that's helpful from an investor perspective because I always worry about the second check, not the first check. Like we can get $500 to $1 million together for a founder with a good idea and some traction, but who's going to write the $3 to $5 million check? That's always the question when you're doing regional investing. And somebody who doesn't have a strong why here is either going to have to move or they're not going to be able to raise that next round. And that's going to actually limit their success. So a couple layers there, I think pretty informed with some experience, but hopefully that's helpful.
When you talk about talent and regionally based and regionally specific talent, isn't engineering just engineering? Isn't design just design? Like when you talk about talent that's specific to a region, where does that become really important?
I think it's important to think about what are the sources of this talent, right? So in the past, we've had forests and we've had oil wells and we've had fisheries. We've had all these resources that were kind of location based. Well, in the knowledge economy, it's the knowledge worker, it's the talent that is the critical resource that every investor and every entrepreneur is seeking. So then the question is, where is that natural resource being generated? Well, it's actually being generated through the universities, right? So the CMU talent flow, the Ann Arbor talent flow, the OSU talent flow, the University of Texas talent flow, those are the sources of the knowledge worker talent, right? So to get to answer your question is, what expertise, unique expertise is being developed locally around those programs that will give you some specific edge? I mean, the one that's probably the most well-known from a regional perspective is CMU and robotics and autonomous driving. Much like Silicon Valley builds these knowledge networks of nodes where people are learning from each other and building the next thing, and they're kind of staying at the edge of each innovation. You can see that around CMU, around robotics, machine vision, autonomous driving, all these things. That talent source is evergreen coming out of CMU, those professors, those research programs. Now you have Uber and Argo AI. You have tons of companies that have been built up around that. They are coalescing and learning on an edge that other places will have a hard time competing with. So understanding, like take Baltimore, for example. A lot of people don't think of Baltimore as being like this, edge technology place, but Johns Hopkins is an incredible university. Then you have the University of Maryland, which is just up the road, which is also an incredible university. And then you have very sophisticated buyers with the NSA, so you have cybersecurity. You have very sophisticated buyers, very sophisticated talent that are kind of coalescing around, say, cybersecurity or financial technology, because you have T. Rowe Price and Vanguard's up the street, and you have Lake Mason and Brown Advisors. There's a lot of legacy talent that's sitting around these universities that give you some unique edge. And so the talent question when it comes to regional is to understand that unique talent that's in different places. Eric, here in Cincinnati, P&G is generating a lot of unique talent around retail, e-commerce, design, a bunch of stuff. And there's companies that have been spinning up around that sophisticated buyer, which is P&G, which then gives unique potential for innovation. And so would I put a autonomous driving company in Cincinnati? Probably not. I mean, I have to make a really strong case for it, but something e-commerce, design, there's a bunch of things that would make incredibly positive case. Much like I mentioned Cleveland doing stuff around medtech. There's clearly an ecosystem around it that would give you some innovative edge.
So what does that mean for smaller communities like a Tuscaloosa or a Missoula or something that's, like where you're from, a 5,000 person town, but probably isn't as close to LA. They don't have maybe the same competitive advantage as a P&G or as a Cleveland or as a Pittsburgh. What does that mean for people who want to start companies there?
It is harder. It is definitely harder. The second one, when I think about smaller towns, is to think the geographic region they're in. So I've spent a lot of time in Youngstown, Ohio, which is kind of between Pittsburgh and Cleveland.
I'm sorry.
Yeah.
I'm from Cleveland originally.
I actually really like Youngstown quite a bit.
So do I. Yeah.
And they have a Youngstown State, which is a state school there. And a lot of people don't realize it, but a quarter of the students there are STEM. They're really been producing the workforce that's been in the factories, running the machines, doing mechanical engineering, electrical engineering. So there is actually, even in Youngstown, a core. Now, Youngstown is missing out on a bunch of other things. It doesn't have a great airport. It has a low population, things like that. But it is nicely located about 45 minutes from the Pittsburgh airport, and maybe an hour from the Cleveland airport, which puts it in a unique position. So my answer to that question is, even small towns need to understand their strategic position. Do they have a school that is creating some version of talent? Do they have a location that puts them in MSA? Do they, I think about it this way, there's 4 elements to either site selection or investing, right? So there's 4: talent, cost of that talent, quality of life in that place, and access. And access could be airports, high-speed internet, office space, things like that. And so whether it's Tuscaloosa or Pittsburgh, or San Francisco for that matter, or Seattle, we should all be thinking about how we fit on those 4 elements. Do we have the talent? What's the cost of that talent? What's the quality of life for the people who are living in that place? And what's the access points, whether it's an airport, the internet speed, or the office space? Because all 3 of those would be key parts of access.
As someone who thinks a lot about regions and cities, when you are making an investment, how much are you investing in the entrepreneur? How much are you investing in the company? And how much are you investing in the city or region that they sit?
Investors are always very clear about your investing, particularly early stage. It's the team, it's the entrepreneur. And in regional investing, it's even more so. A lot of the challenges are redoubled with the regional investing. An entrepreneur needs to be that much more charismatic, that much more resourceful, to attract the talent. It's harder to get somebody to leave a company and come work for you when nobody else in the town is doing it, right? So they have a great job. They're in Columbus working at JP Morgan in the IT department, right? There's not a lot of people know that there's a huge resource in Columbus of super technical people working in finance, that you can access that talent. But getting somebody to leave JP Morgan to come and work at your startup in Columbus is a lot harder than getting somebody to leave Charles Schwab in San Francisco and come and work at your fintech company down the street. Because guess what? The guy at Schwab, all his buddies left in the last thing, and they missed out on something. So there's a cultural dynamic. So that entrepreneur needs to be a great storyteller, needs to be very charismatic, be very clear, visionary leader, but then also raising money. He needs to be able to get on a plane and go and tell a story in places that he doesn't have a direct network. So I would say the entrepreneur and that founding team is more important even in the regional investing than it is in kind of traditional value investing.
Can you talk about the beginnings of One America Works, why you started it, and what it is today?
One America Works started from this notion that there's talent everywhere. There's talent everywhere, but the opportunity is not evenly distributed. So if you graduated from CMU, Carnegie Mellon University in Pittsburgh, and you stay in Pittsburgh, same person, same background, same everything, you stay in Pittsburgh, one stays in Pittsburgh, the other one moves to Silicon Valley. The person who moves to Silicon Valley has like a 10x opportunity set. Literally, they're the same people. And I looked at that and I said, wow, you know what? Can we come up with a solution that solves the two-sided problem of access to opportunity and then the other problem of access to talent, right? We talked a lot about growing innovation, companies that are growing. Growing companies, whether they're in New York, LA, Seattle, San Francisco, they have the same problem. They need talent. They also need a lower cost. There's a whole bunch of things. And so, but then the talent side, this income, this opportunity gap of the number of people that are in places that are not getting looked at by growth companies. I said, well, that's a problem that has a solution. And One America Works was that solution. And they say, can we imagine a world where growing companies find the talent they're looking for in the cities that have historically generated the talent but haven't had access to that opportunity? And then the question was, why isn't it happening? And how do we actually solve those problems? And so I looked at it and I said, actually, it is happening, but it's not happening at a national scale, right? I'm living in Austin. Austin is a great example of a city that's done very well in this like office relocation. So Silicon Valley companies have now chosen Austin as an office location. So you have Google, Facebook, Apple, Oracle, all have big offices in Austin. Frankly, Salt Lake has done quite well, Denver, even Phoenix for that matter. I talked about Phoenix earlier. And I said, well, clearly companies in the Valley are open to opening offices outside of Silicon Valley. The question is, why aren't they doing it more broadly? Why not in Pittsburgh, Cleveland, Columbus, Jacksonville, all these places, Milwaukee, places that actually have the talent? And so I looked at it from my own perspective as an entrepreneur, started talking to tons of other entrepreneurs. And it's just, we all have this playbook, right? There's this growth playbook. You MVP, you seed, you get your first customers, you show some growth, you get an A, you scale, then you go to Austin, right? Or something like that. And I said, well, why isn't it happening other places? And it's really just a breakdown, right? And if when I opened an office in Phoenix, it wasn't because I didn't want to open an office in Milwaukee. It's just I didn't know anybody there. I didn't know the opportunities. And so One America Works, we designed this solution where we put people in Silicon Valley. So we have these reps. They are in Silicon Valley full time. They go around, talk to companies, VCs, and they find out who's looking to open an office and say, would you be open to us helping you find a city that has the talent you're looking for? I was like, sure. And then we go and talk to cities, and now we have these city coordinators who are responsible for, basically telling the story and kind of lowering the friction of getting access to the talent and opportunity in those cities. Now, the step above that is, where are the cities that actually are ready today to scale the teams? And that's where we looked at the formula of talent, cost, quality of life, and access. So what cities have that combination? And we started focusing on those cities, have coordinators in those cities, and then we kind of make the connection where companies are saying, yes, I want to open an office, but I don't know how to get started in Pittsburgh. We have a coordinator in Pittsburgh who will kind of receive that, call it RFP, and then help them say, hey, this is the kind of talent we have here. Here's other companies like what you have. Here's how you can get started, and then help them recruit the team if they choose to come to Pittsburgh.
What I love about this model, I haven't heard anything like it. You hear some companies that will make the point of, there's talent all over the place. We can help you find talented people and they can work remotely for your company. It's fine to work remotely. You're talking about actual offices, additional headquarters for companies that are based in the Valley. So I'd love to hear from you. How many offices roughly do you think Silicon Valley companies are opening outside of Silicon Valley per year? And how big is a typical office? Are they hiring 50 people and starting there? Is it 10 people? What types of numbers do you know around that?
It spans the entire spectrum, right? So starting at the highest level, we all remember Amazon HQ2. And
painfully,
in theory, that was a good idea. They were signaling that they could have done it anywhere. And I thought that was a good thing. In the end, the execution was a bit flawed, and it kind of backfired on them. And maybe it backfired on a lot of places. But the reality is Amazon has 1,000-person offices, not just warehouses, but like offices in a lot of cities. Apple has 5,000 people in Austin, right? Like that's a big campus. Google is building a huge tower, it'd be the tallest building in Austin. Google is building that in Austin. And they're not doing it out of charity. They're doing it because the talent that they need is here, right? That is just a straight fact. The big companies seem to have they have the resources, they have the insight, they have the capability to access this talent in more places. But it's the mid-sized companies that actually don't have the resources to do site selection, don't have the resources of those offices. I think that's where the biggest opportunity is, right? That's where if you're a 200-person company in Silicon Valley, you're competing in a knife fight with well-funded public companies for talent in Silicon Valley, and you need that next leg, you need that edge. If you can find the talent you're looking for in these other cities, you can then be the best option for that high quality team and get them going in places, like I said, Cleveland, Columbus, Pittsburgh. These are places that have the talent that companies are looking for. Now, it is definitely happening more on the high end, like the big companies. And I think the opportunity is for the mid-sized and fast-growing companies to get access here. And I think that's probably where One America Works has the most potential to help companies succeed.
Do you ever see it happening the other way? Like, there's the Silicon Valley companies that are moving to other offices, but are there companies in Cleveland that are coming to you and saying, hey, we want an office in Silicon Valley?
We haven't been approached for an office in Silicon Valley. We have definitely been approached for helping recruit talent, individual workforce in Silicon Valley to move to some other city. So there are companies there are some talent types that are really hard to source anywhere, like product manager. Very difficult, very, very difficult. And Silicon Valley has some of the best product managers in the entire world. It's a real secret to the success of so many companies. But if you're Duolingo and you're in Pittsburgh and you have an amazing business with a great founder, great technology, you're short product managers. And Duolingo, I mentioned that because they famously put a billboard up on the 101 that said, buy a house, move to Pittsburgh, and they were recruiting people. And so we have definitely talked to companies about them doing direct outreach to talent in Silicon Valley to move to their growing companies in outside of the valley.
You said before that you need to have 1 foot in the valley and 1 foot out. Do you think that the mid-sized companies outside of Silicon Valley are missing out by not also being in Silicon Valley?
There's a chance. The thing that I see companies that you're referring to make the mistake of is that they're solving a problem that was already solved. And a lot of times, because the valley is moving at such a high iteration, literally a month or 2 months different, we may have already, gone past that problem, now focusing on the next problem. And not knowing that little Rosetta Stone of a solution could set you back a lot. And so the nice thing about where we are today is you can actually access a lot of that innovation through the internet, right? Like you can follow the right blogs, you can follow the right people to hear what's going on, develop a network of other founders, of getting an investor who's based in the Valley, who is well connected to help pull your senior team in to do like quarterly CTO conferences and things like that, where you can hear what's going on. These really do matter. And I've done them with all my companies, right? We try to get our technical teams especially plugged into kind of networks in Silicon Valley. The truth is that those technical networks are already global. They're already operating between, London and Berlin and Shanghai and, Bangalore. So there is already a culture of collaborating. A company in Cleveland needs to realize that they can access that and find those access points. Doesn't mean they necessarily need to have a physical presence in Silicon Valley, but they need to be thinking about, is the problem that I'm trying to solve already solved somewhere else? Because I'm always saying to people like, why this? Like, is this problem still need to be solved? And why are you uniquely set up for it? If they know that their problem hasn't been solved, they should find the cloud computing stuff, the security stuff. They should find the collaboration tools, all that massive scale platform infrastructure that Silicon Valley is so good at. Don't rebuild that stuff in Cleveland. Do your edge piece, do your computer vision that's going to make the drone platform, that much more efficient. Don't rebuild the drone platform. Like there's a bunch of operating systems that you can operate on, and then you can just put your piece on top of it. So it's a great question. I think there's a lot more ways to do it. And I think it's cultural and mental rather than physical in that case.
At this point in the life cycle of One America Works, what are some of the cities that you're seeing as rating high on these 4 levers of talent, cost of talent, quality of life, and access, the companies that are coming to you now in the Valley, what are some of the cities that you're having them take a look at most frequently?
Right. So we'll put it in three kind of big buckets. There's those who have already kind of proven that they're good destinations. And I mentioned those is Austin, Salt Lake, Denver. Like those are pretty well-worn paths. And then we have call it our super hubs, like these regional hubs. That would be like Phoenix, Chicago, Atlanta. Phoenix is pretty well known. There's a pretty good path to Phoenix. We're seeing a lot more people interested in Chicago and Atlanta, but how to access those markets it's still not well understood. So we're building some resource capacity on helping companies access both of those. And then there's what we call the new cities to the playbook. They would look a little bit more like Austin or Denver. And this is where you get Pittsburgh, Columbus, Indianapolis, Nashville, Raleigh-Durham. Those are places, I just gave you a pretty good list there, Kansas City, that have really good answers to the four questions, but have not historically been accessed by Silicon Valley or growth companies in general. And I should just say here, it's not just Silicon Valley. That's a shortcut for innovative and tech companies. New York City has the same problem, right? It's very expensive there, and you have some incredible high quality talent that have very unique skill sets. But when you start scaling a team, it's hard to put 300, 400, or 500 people together in the West Village, right? It's just really hard to do. So New York companies have also got onto the One America Works theme. And particularly like with Pittsburgh, it's a lot of direct flights. It's East Coast. Columbus is also very easy to get from New York as well. So when I'm talking about kind of Silicon Valley, there's a Silicon Valley style company that also exists outside of Silicon Valley that would benefit from this model.
To kind of go full circle to where we started this conversation, with those three layers of different types of cities, my gut would tell me that if I'm a company looking to set up a new headquarters, looking at quality of life, cost of talent, access, those all seem fairly similar for a lot of those cities. How often does this come down to the knowledge workers we were talking about versus one of those other three levers?
When it comes down to, in the end, how comfortable the team is that they can recruit the people that they're looking for. It really comes down to, if you're assessing between Pittsburgh and, say, Indianapolis, right? They're a little further apart than Columbus. Both have incredible cases to be made for why you should go between those two. They do have a slightly different talent pool and a different set of companies at success points. Those would dictate which city a company would choose. Now, there is another element, it's just the human element, and the quality of life question is one that is a little bit company determinant, right? Some companies might say, you know what, Austin is cool. I can see us doing Austin. Indianapolis, I just can't imagine it, right? Where somebody say, you know what, Atlanta, it has an urban feel to it. It's kind of has a bigger vibe. It has professional sports and stuff like that. So they might see themselves saying Atlanta versus, say, Pittsburgh. And so there is a human element to the quality of life question that in the end you have to. So here, I'll leave you with this example that really does define it a bit. So you have this growth company, 200 people, you're raising your C, $25 million round. CEO, it's announced publicly, CEO gets in front of the company and says, hey, great job, everybody. We're growing. We're going crazy. We got $25 million in growth. And good news is we're opening a second office. Everybody's all ears, right? Answer one. The office is New York City. Awesome. New York. Love it. Paid trips to New York. I don't really want to live in New York, but I love that we're going to be there. Love to go. Check it out. Answer two. Austin. Wow. Awesome. Music, fun, all this kind of stuff. Low cost. Like, I would move to Austin. Like, senior teams, the leaders would actually move to Austin, build a team. It's just great. Number three, put your city in the answer that the CEO makes that announcement to the company, and imagine what the company is going to say about that answer. And that will dictate whether the quality of life has met the bar. This is really important way to think about it. I say that when people say Pittsburgh, at first they might say, I'm not sure about it. But when they look closely, professional sports, great housing, East Coast time zone. Like, there's a bunch of stuff that makes Pittsburgh, for example, a really great option. Or in Columbus, like, You take a little closer, like, oh, it's a university town. It's like, there's actually a lot of cool stuff to it. It's a bit suburban if you're in the suburban versus being a little bit more urban. And there's a value to it that people would say, yeah, I get that. That's really cool. And you can then put Nashville, you can put other cities in, and you can see that story working. You can run that same scenario with other cities. And if you're a city and you don't have a good answer for, yeah, that makes sense, then you need to think about how you change that.
This has been awesome, Patrick. If people want to learn more about you or how they can get involved with One America Works, where should they go after the show?
OneAmericaWorks.org. Love to have you sign up for our newsletter. Let us know if you want to bring us to your city or tell us about your city. We'd love to learn more.
This episode of Upside is sponsored by Tresta. Tresta is an app for iPhone and Android that lets you do business calling and texting from anywhere with no hardware, just the smartphone you're already using. Tresta is the best business phone app on the market, whether you're a founder or freelancer just starting your business or you're already established. Growing your network and your business is all about communication. You've got to be available no matter where you are. Tresta offers the call management features that empower you to communicate smarter and more efficiently, like auto attendance, call recording, user groups, and more. And you don't need any special equipment, just the smartphone you're already using. Tresta is easy to configure, so you can set everything up yourself, all online. Tresta's virtual phone system makes it easier and more affordable than ever to set up a fully functioning mobile office. It's just $15 per user per month with no contract. So start your free 30-day trial today at www.tresta.com/upside. That's www.tresta.com/upside.
All right, Jay, we just spoke with Patrick from One America Works. What worked for you in that interview?
I like this model. I think it makes a lot of sense. I think this model and this idea focuses on a very core human truth, which is we don't know what we don't know. But from the outside, we often assume people have a lot of information or perfect information. So if I'm a company in Silicon Valley and I'm looking for a second headquarters, it makes a lot of intuitive sense to me, to Patrick's point, that I'm probably really only aware of some of the cities that are nearby that maybe my friends have opened offices in, and am blissfully unaware of some of the benefits of some other major emerging cities across the country that could be much better fits. I love that. We didn't get to talk much about the financial model behind One America Works and how it's funded. It's a nonprofit, but I also like that about this. I think it's a good thing for the country. I think it's a good thing for companies. I think it's a good thing for cities. It seems like one of these win-win-win opportunities that genuinely lifts all boats.
I think we see it on Upside, at least, happening in reverse. I think about Blake Lawrence, who's in Nebraska, but then he spends most of his time in New York because that's where the front-facing side of the business needs to be. But his entire team is in Nebraska. So I think this idea of geographic arbitrage is just like really smart for a company to do. Like I think about Lawn Guru and how they moved to Ann Arbor from Silicon Valley because people in Silicon Valley just didn't understand lawns. But what if they needed capital? And I know those guys don't because they have their own lawn care service that's making the money that funds them. But if they did, they could live in Silicon Valley part of the time or have a front-facing office in Silicon Valley for their fundraising experience and have their core business still be in the Midwest. So I have to imagine that there's a lot of companies in Silicon Valley that have a city that maybe they just don't know has a superpower in the thing that they're doing, where they could have a huge incremental benefit just from being in that city, whether it's consumer packaged goods in Cincinnati or pet health is in Kansas City, I think. Just a lot of like cities that are vertically focused on things where companies can benefit dramatically just by showing up in that city.
One of my favorite parts of this interview, Eric, was asking him to, on the spot, rank some cities for us, which is something that we do kind of for fun on this show. You mentioned good destinations of Austin, Salt Lake, and Denver, some of the regional super hubs of Phoenix, Chicago, and Atlanta, and new cities to the One America Works playbook of Pittsburgh, Columbus, Indianapolis, Nashville, Raleigh-Durham, and Kansas City. That tracks pretty well with what we hear generally on the show, which also makes me begin to think, are we right And is everybody right? Or are we just all starting to circle around the same thing and come to a consensus?
Yeah, like what's the non-consensus pick right now that's actually going to be the right answer?
Yeah.
Or is this a scenario where consensus is right because it's just a numbers game? So when everyone says Austin's the new place, then Austin just becomes the new place because everyone moves to Austin because it's the new place, right? Like is it a self-perpetuating cycle, or is it everyone look over here, but this is where the real action's happening? I don't know the answer to that. What I do know is that his answer to those city ranks is very in line with what we talk about with other investors and entrepreneurs on this podcast.
I'm excited to see the first company that gets placed in Columbus through One America Works. I know that our city would welcome that. It's a priority to try to bring in different companies that can both bring talent and keep talent and grow talent. So I think it's a great idea. We'd love to hear your thoughts on this episode. You can tweet at us at UpsideFM or email us hello@upside.fm if you have something a little bit more longer form. If you have a disagreement or a city that you think is not in that playbook that you think should belong, tweet at us and let us know. Otherwise, we'll talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter @UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming, find a way and get it.